Hello value investors, thank you for joining me. Today I want to talk about Microsoft and why I believe that Microsoft is undervalued. So we're going to talk about Microsoft revenue growth rates, we're going to talk about its operating leverage. Then we're going to talk about its balance sheet and free cash flow capabilities. Finally, we're going to bring it all together and talk about its valuation. If you haven't done so already, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why, with balanced argument for the stocks I own. So hopefully you can do a free trial and find something that suits you. So let's press ahead. So the most important thing here, right, is that on the top line, Microsoft is saying that we just reported a 12% and it's guiding for 9% year-over-year growth rates into the quarter ahead. Now, this didn't excite the street, but this is the thing, right? Microsoft doesn't need to be punching out very strong growth rates, because what the magic is coming in is that it has very high margins and its operating leverage really works out positively. So without any financial shenanigans, you can see that as you come down to its operating income, it was up 25% year over year. Now, this is what I just want to briefly touch about. If we look beyond the fact that Microsoft has strong operating leverage, if you look at its balance sheet, it has 70 billion of cash, right? Net cash. If you take out the debt, it has 70 billion in net cash, and in a 90-day period, Microsoft makes 15 billion of free cash flow. So every 90 days, Microsoft is making 15 billions of clean free cash flow. So with that amount of free cash flow, together with a strong balance sheet, that's why it's able to increase its dividends slowly and increase dramatically its share repurchases. So without a shareholder needing to do anything, just holding that position, the shareholder is 21% year over year better off. That means without any capital appreciation, the shareholder is getting a 3% return on investment just by holding the shares, right? So that's not including anything by capital appreciation. Then if we move on, we can see the fact that Microsoft is very well diversified. Here I put this picture of Microsoft as a cloud business because that's what people are really excited about. People are always looking at how has Azure performed this quarter, how has AWS performed that quarter. But I urge investors to think beyond that, because Azure is one sector and one part, but Microsoft is so much more than that. So I point out in the article that Microsoft has this new application, and I just mentioned this just in passing. So Microsoft has this new platform as a service communications called Azure Communication Services, and this is going to go head to head with Twilio, and it basically is just allowing developers to have an API that has low code, and it's kind of the same technology or infrastructure that Teams was built on. So I just mentioned this in passing. So this is just one opportunity. Microsoft is like tentacles everywhere. Every single investor at some point in the day is using Microsoft. And this, I'm a value investor, so for me, it all comes down to valuation. So in the moment in the stock market, so many stocks are truly overvalued, right? But Microsoft is compounding on the bottom line over the past 5 years at 30%, thereabouts. So this quarter came in at 32% year over year. But this is the point, right? So investors are being asked to pay 37 times trailing earnings for Microsoft as it compounds ahead at approximately 30 to 32%. So there's no way that investors are overpaying for this household name. Hope you found this video useful. Don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns, where I tell you which stocks I own and why. Thank you for listening.